As usual, hello ladies and gentle friends. I'm not going to make this video too long. I want to jump right into the charts. To address everybody that's giving me or going to give me any backlash with Patreon, I really don't care. I said what I had to say about the situation. The content is there for free. I gave you guys exactly what I do in the market from start to finish. If you are too lazy to go through the content, that's not my problem, okay? Like I said, I gave you guys every single thing I do from start to finish. From the broker I use to the withdrawals that I make. Like I said, my portfolio that I showed in my 100 to 30,000, you see Think Markets at the top. I showed you guys a live withdrawal from Think Markets. I don't know what more you want from me. What I'm gonna give to you though is what I promised. Free content. We're going to be talking about correlating pairs. The NAS100, the US30, and the S&P 500 were in a consistent correlation for years. COVID-19 happens, we see a surge in Tesla, Zoom, all these other tech companies, and the NAS100 takes off ahead of the S&P and it takes off ahead of the US30. But within the last week to week and a half, these pairs have fell back into a tight correlation. And I'm going to take you guys through the charts so you can see exactly what I'm talking about. How does correlating pairs help you or give you an edge in the market? Think about this. Like I said, the NAS100 had taken off above the S&P 500 for a long time. In my head, it's just a matter of time before these pairs fall back into correlation. If something has been correlating since the beginning of the chart time that we can see and falls out of correlation due to economic downpour or whatever is happening economically, it is imperative that these pairs fall back into correlation at some point. Meaning that if the NAS100 was ahead of the S&P, it was only a matter of time before the S&P caught up to the NAS100 and then started to decline just as the NAS100 is doing right now. So by looking at the NAS100, I knew in my head that just with a little bit of patience, the S&P 500 will eventually catch up to the NAS100. No more talking in front of the camera. I'm going to take you guys straight to the chart. Let's go. Alrighty, so without any more talking at the camera, I'm going to take you guys right into the chart. Right now I have the S&P 500, but I want to start with the NAS100. Alright, so the NAS100, if I go through dates, sorry, the thing is a little weird, it's right in front of my computer, but so we all know COVID basically started around February in the market. Right, we started seeing significant drops in the market from February 19th. All right, so technically for day traders, COVID started for us around the ending of February. When we really started to see significant drops is beginning of March or going into March, and then obviously the government shutdowns started happening the first week of March. Prior to all of this turmoil, if you look at every single candlestick on every other pair, not every other pair, excuse me, the S&P 500 and the US30, you notice that they were consistently moving at the exact same pace, right? So if I can even get my circle button up on here and show you guys around this area, look how similar this area looks in all the other places. It's the same thing here. If I clear that and I put another drawing here, okay, that's when everything started to go downhill, right? If I look at the S&P, it's the same thing on the S&P, right? I put a circle here. So everything prior to this, all of this here is in correlation, correct? Looks the same. You have a huge downpour which correlates, so the sell-off correlated, and things were consistently going downwards in correlation to each other. And then, like I said, we saw a surge in certain things in the NAS100 culmination, so whatever makes up the NAS100. I don't have specifics, but from my understanding, it was things like Zoom, Amazon, Tesla, all these things were driving the price upwards. All right, so it drove the price upwards, but look what happened to the S&P. The S&P stalled for a very long time and didn't make those higher highs as fast as the NAS100 did, but still eventually came to break its highest point ever in the market. So it was a little bit behind, but still eventually caught up. Same thing with the US30, or very similar. The US30 actually hit its all-time high and then came back down. But again, it's almost the same concept as what I'm trying to get at. The US30 or the Dow, I was never using it to show correlating pairs. The NAS100 and the S&P 500 were more in correlation in my eyes than the US30. But what I'm trying to get at with this video, using correlations to your advantage. Right now, we're watching the S&P 500, the US30, and the NAS100 all correlating in the past, I'd say about a week. So if I circle that, you notice they've all come to a high, and for some reason all seem to be moving consistently in the same place. Now, I didn't even have to draw a brand new circle to show you guys that we're literally in correlation. If you look at where my 200 EMA is, look where my 200 EMA is on the US30, and it's the same thing with the NAS100. They're all trading under, the 50. That's my 50, the blue line. They're all trading under the 50. Okay, when prior to, they weren't doing that. The only difference is on the Dow, on the US30, is that the 200 EMA is hanging out under there. All right, so right now, if you watch my live streams and everything is cohesive, I've been trading all three pairs. In my live stream a month ago, I wasn't capable of trading all three pairs because they weren't in correlation anymore. Anytime I'd buy the NAS100, the S&P 500 would drop for some reason, okay? So now that they're back in correlation, I've been trading all three of them. Why? I can't say the word one more time, is because they're correlating. If I even drop a time frame on each of them, you'll notice that they're all sitting very in the similar places as to all, they almost look like the same chart, okay? I don't think I have to give any more details on what I'm trying to get at. So use correlations to your advantage. If you're gonna be looking at different pairs, at least look at pairs that are in correlation, so you don't literally start to crowd your brain with all these different things. If you're looking at the USD JPY, look at something that's in correlation to the USD JPY. Okay guys, this was a quick video. If you have any questions, please leave a comment in the comment section. Like the video if you like the video, dislike the video, and as usual, leave a comment and don't run away from the comment section because I will get back to you. Good comment or bad comment. I love you guys. Correlating pairs. Any questions, please comment. And I'll see you guys in the next video.